Dividend. The withholding tax on dividend is covered under Section 194. Now, dividend declared by an Indian company is exempt in the hands of the shareholders. So, when we talk about dividend, it can actually be declared by an Indian company to another Indian company or a foreign company. Right? Instead of Indian company, you can also have someone who is a resident. Or the dividend can be declared by a foreign company, not all foreign company, but a foreign company which has made prescribed arrangement to declare and pay dividend in India. Over the years, what has happened is that the dividend declared by an Indian company or a foreign company which has made prescribed arrangement is exempt in the hands of the shareholder. The purpose of TDS is to collect the tax from the recipient of income. But if the recipient of income is not liable to pay any tax on such income, then the question of TDS does not arise. Definition of dividend is given in section 222. Until financial year 17-18, which is 31/3/2018, the dividend referred to in subclause A, B, C and D of section 222 was exempt in the hands of the shareholders. However, the dividend referred to in section 222E was something which was taxable in the hands of the recipient. Therefore, the withholding tax obligation under section 194 was actually applicable on dividend of the nature referred to in section 222E. But effective 1/4/18, which is from financial year 18-19 onwards, even this dividend is now exempt in the hands of the shareholder. Instead, the company which is declaring the dividend has to pay dividend distribution tax on such dividend. Which means that now all dividends are exempt in the hands of the recipient. And if that be the case, then there is no question of any TDS on dividend. But you should know these provisions. So if, for example, if you are dealing with a case prior to this date, then the dividend which is referred to in section 222E was liable for withholding tax. Now, if it was liable for withholding tax, what were the provisions? The provision said that the principal officer of an Indian company or a company which has made prescribed arrangement for declaration and payment of dividend in India, before making payment in cash or by issuing any cheque or warrant in respect of any dividend, or before making any distribution or payment to a shareholder of any dividend under section 222A, B, C, D or E, shall deduct an amount equal to 10% from the amount of such dividend. Right? Like I said, these were the provisions which were there. But because of the fact that the dividend referred to in these four subclauses was exempt in the hands of the shareholder, there was no withholding tax on these sections, or the dividend which is covered in these sections. Now even the dividend referred to in 222E has also been removed, in the sense that the company has to pay dividend distribution tax on such dividend. The shareholders, they don't have any tax liability on such receipt. Therefore, even this is now exempt, and therefore there is no withholding tax on dividend.
Thank you for watching this video. If you like this video, you can subscribe to our channel to stay updated on more such videos. You can like these videos and also share it with your friends. And if you're looking for material on this particular subject, you can visit us on our website at www.arinjayacademy.com.